Central Bank Digital Currency. The Reserve Bank of India defines CBDC, digital rupee, as a legal tender issued by central bank in digital form. It resembles sovereign paper currency but is presented in a different way. It can be exchanged at par with the current currency and is recognized as a method of payment, legal tender, and a secure place to deposit value. Although CBDC is a digital currency, it cannot be compared to the private virtual currencies that have exploded over the past 10 years. Private virtual currencies are in stark contrast to the traditional understanding of money. Due to the lack of inherent worth, they are not commodities or claims on commodities. Types of CBDC. CBDC or central bank digital currency can be classified into two broad types, viz. General purpose or retail CBDC, that is CBDCR, and wholesale or CBDCW. Wholesale CBDC or CBDCW is typically used for transactions between a nation's central bank and its private or public banks. Payments made with CBDC assist in lowering the risk associated with counterparty credit and liquidity. This area is one of the CBDC's most crucial use since it contributes to nation's whole financial system becoming faster, safer, and more efficient. It would enable the RBI to communicate more quickly with its intermediaries in the Indian context and contribute to improvement in the real-time gross settlement or RTGS system already in operations. By establishing a corridor network or bridge with an operator node jointly controlled by central banks of the participating nations that issue the depository receipt, wholesale CBDC can facilitate cross-border transactions between the wholesale CBDC system of other countries. It aids in accelerating and securing cross-border payments among the participating central banks. Retail CBDC. Retail CBDC or central bank digital currency in retail serves as a digital representation of fiat money intended for public and is utilized by regular customers to deal in money from day-to-day activities. Distributed ledger technology or DTL, such as private blockchain network managed by government, is typically the foundation of CBDC and enables it to track across maintaining anonymity. Additionally, it assists in minimizing the involvement of third parties, hence preventing any illicit behavior like fraud or money laundering. The central bank may issue retail CBDC directly to public. Direct issue is the name given this type of issuance. As an alternative, retail CBDC might be distributed to middlemen such as public or private banks who would then distribute it to the public like fiat currency. This distribution strategy, known as indirect issuance, transfers counterparty risk to regulated intermediaries, as in the case of indirect issuance. A third issuance approach, known as hybrid issuance, can also be used, in which retail CBDC is used to intermediaries. In contrast, the central bank frequently updates its own ledger with the retail balance records in the case of hybrid issue. CBDC and its role in supply chain management. In the entire supply chain, there is a wide range of customer-facing activities where the central bank is unlikely to have comparative and competitive advantage as compared to banks, especially in the environment where technology is changing rapidly, which inter alia includes distribution of CBDC to public, account keeping services, customer verification such as KYC, and adherence to anti-money laundering and counter-terrorism financing checks, transaction verification, etc. Programmable payments can also be used in industrial supply chain ecosystem. In this case, pre-programmed digital CBDC could only be used for specific purposes such as fuel expenses and state border taxes. Additionally, it might be used to settle payments for imports and export, doing away with requirement of expensive network of correspondent banks. Additionally, CBDC can speed up international money transfers and lessen the need of logistical activities like note printing. With CBDC, transaction cost can be reduced, authentication can be enhanced, and payment efficiency can be boosted to benefit all retail users. In addition to bringing those working in the last mile delivery and supply chain jobs into the official financial fold, this transaction from cash to digital currency will make the economy more open and effective. Corporate development leaders may start an investigation along several product lines to establish transparency to expected effects, whether favorable or unfavorable, on value chain segments. For many organizations, especially those that facilitate transactions, securing a lucrative position inside the mutating and increasingly modularized value chain will be essential. Product and service owners should keep prioritizing possible CBDC use and identifying enhancers to use them to produce the good bottom line. These opportunities may include decrease in transaction cost, decreased risk, and new prospects for revenue creation, such as new approaches to processing payments and integration with new systems in new services. To conclude, for the ecosystem's participants, the CBDC will open a lot of opportunities for developing services that will make it simpler and more practical for people to transact and make digital payments for a variety of use cases and requirements. It could be used to lower credit and liquidity concerns and increase effectiveness of payments and security settlements. It can be urged that payment is helpful in supply chain management applications and digital currency will improve visibility in the supply chains.